Have you ever wondered how to make money with Forex? Welcome to the exciting world of Forex, short for foreign exchange. It's the international marketplace where currencies from around the globe are traded 24 hours a day, 5 days a week. It's like the stock market, but instead of buying and selling shares of companies, you're trading currencies like the US dollar, euro, or Japanese yen. It's a dynamic, fast-paced environment where fortunes can be made and lost in the blink of an eye. Forex has skyrocketed in popularity over the past decade as more and more people have discovered its potential for generating income. With today's technology, anyone with an internet connection and a bit of startup capital can begin trading and potentially make a profit. Now that you know what Forex is, let's dive into the process of how you can actually make money with it. Forex trading might seem complex, but once you understand the basics, it becomes much simpler. Let's dive into those basics now. Forex trading, at its core, is about selling one currency to buy another. It's like a seesaw. When one side goes up, the other goes down. This is the essence of a currency pair, the foundation of Forex trading. Think of it this way: every time you're buying one currency, you're simultaneously selling another. That's why currencies are quoted in pairs like EUR, USD, or GBP, JPY. The first currency listed is the base currency, and the second is the quote or counter currency. The base currency is the one you're buying or selling, and the quote currency is the one you're using to make the transaction. Now, let's talk about market volatility. It's the rapid and significant price movements that can happen in short periods of time. In Forex, this is particularly important because high volatility often leads to large fluctuations in currency pair prices, which can create opportunities for substantial profits, but also significant losses. So, it's always a good idea to keep an eye on the market volatility. Next up, we have some key Forex terms that you need to know. First, we have pip. A pip is a unit of measure for currency movement and is the fourth decimal place in most currency pairs. For example, if the EUR USD moves from 1.1050 to 1.1051, that's 1 pip. Then we have the spread. This is the difference between the buy and sell price of a currency pair. The spread is how brokers make their money. They'll sell to you for a little more than they're willing to buy from you. Lastly, there's leverage. Leverage allows you to trade larger amounts than what's available in your account. It's a double-edged sword though. While it can amplify your profits, it can also increase your losses. With these basics in mind, you're ready to take a closer look at the Forex trading process. Now let's get into the nitty-gritty of Forex trading. Forex trading, like a well-composed symphony, follows a certain rhythm, a step-by-step process that guides you from start to finish. Let's start at the beginning. First off, you need to choose a currency pair. This is the cornerstone of your trade. It's a bit like choosing a dance partner. You want someone who moves in a way that complements your style. Once you've chosen your currency pair, it's time to analyze the market. This is where you become a detective, looking for clues in economic news, historical data, and technical indicators. You're trying to predict how your chosen currency pair will move. Will it waltz gracefully upwards or do a quick step down? The more information you gather, the more informed your prediction will be. Now, you're ready to place a trade. But wait, don't just dive in. Like a well-prepared athlete, you need a plan. This is your trading plan, a roadmap that outlines what you'll do in various scenarios. It's like the choreography of your dance. It helps you know when to step in, when to twirl, and when to step out. With your trading plan in hand, you're ready to place your trade. But remember, Forex trading isn't a one-and-done deal. It's a continuous process of monitoring the market, adjusting your positions, and managing your risk. Speaking of risk, let's talk about risk management. This is your safety net, the thing that keeps your potential losses in check. It's like the harness of a tightrope walker. It won't prevent you from falling, but it will stop you from hitting the ground. Lastly, remember that Forex trading is a journey, not a destination. It's about continuous learning, refining your strategies, and adapting to the ever-changing market conditions. It's a dance that never ends, with new moves to learn and new partners to dance with. Remember, successful Forex trading isn't about making a quick buck, it's about making informed decisions and managing your risk effectively. So, how can you increase your chances of making money with Forex? Well, there are a few key strategies that can help you succeed. Firstly, understanding economic events is crucial. Major happenings around the globe can significantly impact currency prices. So, it's important to keep an eye on the news and understand how these events might affect your trades. Secondly, using stop-loss orders can be a real game changer. These handy tools allow you to set a specific price at which your trade will automatically close if things start going south. It's a safety net that can prevent huge losses. Thirdly, never risk more than you can afford to lose. Forex trading is inherently risky, and there are no guaranteed wins. So, always trade responsibly and within your means. Finally, consider using a demo account for practice. It's a risk-free way to get a feel for the market and hone your trading strategies. By following these tips, you can maximize your potential profits and minimize your risk. Forex trading can be a profitable venture, but it's not without its risks. As we've explored throughout this video, understanding the basics of Forex trading is fundamental. It's more than just buying low and selling high. You need to grasp the intricacies of currency pairs, market trends, and economic indicators. Having a solid trading plan is equally crucial. It's your roadmap in the often volatile world of Forex. It guides your trading decisions, helps you stay focused, and provides a benchmark for success. But remember, no trading plan is foolproof. Always be ready to adapt and evolve. And let's not forget the importance of risk management. Never risk more than you can afford to lose. Use stop-loss orders, diversify your portfolio, and keep emotions at bay. Don't stop here, continue learning. Read books, attend webinars, join forums. The more you know, the better you'll trade. With patience, discipline, and the right knowledge, you can indeed make money with Forex. Good luck on your trading journey.